Hello everyone, welcome to the Trendlines channel. So this weekend, I actually posted a video about two investment stocks. One was Aris Wellness, other one was Swaraj Engines, and two swing trade stocks. So if you did watch them, and if you did like the videos, don't forget to subscribe to the channel and don't forget to like this video. But today's video, we're going to look at a very interesting, learning tool that I use day in day out. Especially if you're a technical analyst, or if you want to be a technical analyst, this is the foundation for technical analysis, which is Trendlines. So that's what we're going to discuss today. And I'm going to show you how to draw trend lines, how to adjust trend lines, and which trend lines make more sense and which trend lines do not make more sense. Now remember, even the best of best technical analyst traders in the world use trend lines, or at least some kind of a dynamic trend line like a moving average or actual trend lines to actually analyze stocks. And that's what we're going to look at today. So before that, if you haven't followed me on Twitter, do follow me on Twitter, because I already posted a thread about trend lines there, and you might have got this information much earlier as well. Okay, so let's look at the topic about trend lines today. So first thing I wanted to show is how do you draw trend lines, right? Now trend lines is one of the most easiest tools in technical analysis, but it is not a science, right? You cannot say that this is how this is a perfect trend line. Now, the trend line that I draw might be completely different from a trend line that another person draws, or I might be looking at a different section of the price history, whereas someone else might be looking at a different section of price history and drawing a different trend line. Now, I might say the trend line is, the trend is actually up in a shorter time frame, but whereas someone else might say trend is actually, down in a longer time frame. So, for all this is what we're going to discuss today. And here, I'm going to show you quickly how to draw trend lines quickly. If you take a price chart, for example, here, I've taken the example of TCNS clothing, which I covered in one of the swing trading videos a couple of weeks back, which has done really well. But here, the question is how do you draw trend line? Now, let's say this is the first time you saw the stock, right? Now, stock went from here, it went up, it formed a swing high. So when I say swing high, so this is a low point and this is a high point. So after forming a high point, it came down and then it again went high. Now, the moment it crosses the previous high, I just connect these 2 points and then you can draw a line like that. Right? Let's assume this part is not yet done, right? And then what happens? The stock starts moving higher and higher again. Now, the rule in drawing a trend line is you need to connect the swing lows if you want to draw a trend line which is sloping upward. Now, that's called an upward sloping trend line. If you want to draw an upward sloping trend line objectively, then you just need to connect the swing low points. Now, this is a swing low, this is a swing low. Now, if you draw, you get this line. Whereas if you draw this line, if you connect this swing low and this swing low, so this point was low point, it went high, again came low and went high. So these are the two swing low points. So if you connect these 2 points, you get this line over here, right? And then the stock again went higher, it came down, went higher, it came down. Now, if you connect these swing low points, then you get this trend line. Now, remember there's primary trend line and there is secondary trend line. Now, the primary trend line is a trend line which connects the first 2 swing lows in a chart. Now, after that, whatever trend lines are being connected, now this is a secondary trend line and this also is a secondary trend line, but whereas this is a primary trend line. Now, remember, this is very important to know because stock reversals from primary trend line really do well than stock reversals doing from secondary trend lines. We'll come to that shortly in another slide. But for now, all you have to remember is connect swing lows wherever you see, and you will have different kinds of trend lines. Now, this is one primary trend line, so secondary trend line. This is secondary, but this is a primary trend line. Now, remember, whenever stock starts moving higher and higher like this, it starts picking up momentum, right? It starts going up faster, higher, and it also goes up higher in a shorter duration. Like, for example, from here to here, it took a very slow move, whereas from here to here, it was very fast. Now, the steepness, when I say steepness, it's the angle of the trend lines increase as and when the momentum of the stock increases, right? So the angle becomes steeper and steeper when the trend line. So finally, if you draw a trend line here, if you see this is the most steepest trend line. I'm not drawn one, but just consider imaginary here. This is the most steepest trend lines of all because the stock really had a crazy rally here. Now, that's how you draw trend lines. Now, if you want to draw a downward trend line, I'll show you how to draw upward trend line. And downward trend line, it's the same thing. You have to connect the swing highs, right? So every swing high here, if you connect, then you get a downward trend line, right? Now, you can also do the same thing here. You can also do the same thing if you have something like this one here. You can also draw a downtrend line like that, connecting that swing high, then that swing high, and you can draw a trend line like that. Okay, so it's simple. If you want to draw an upward trend line, connect the swing lows. If you want to draw a downward trending trend line, then connect the swing highs. So that's simple to draw trend lines. Now, just because I taught you this, don't think that you can become a really good technical analyst drawing trend lines overnight. It takes years and years of practice. It takes thousands of trend lines to draw, and then you slowly start understanding which trend line makes more sense and which doesn't make more sense. Okay, now the second point is trend lines are not really zone. They're not single lines like how I drew before, right? Now, if you have some practice, you can draw single trend lines. But if you're a beginner, I'd suggest drawing multiple lines like this. Now, that's why I say trend lines are really zones, right? For example, here you could have drawn the single trend line, and if you are really good in markets, but then you would miss something like this reversal over here. So whenever you draw trend lines, try to connect the touching points here and try to connect the points wherever there is a swing reversal, right? For example, here and here, if you just draw this one, you would have missed this one here. But now I'm connecting that point and that point. I draw two lines here, parallel lines, and then you see the stock has a reversal here as well, right? And then if you had waited for the trend line to come here, the price to come here, you might have missed on the trade. But since you had this line here, then you draw a trend line there as well. And then you know that the price is reversed from that zone as well. So trend lines are not really just single lines. Because of the spikes, you might have a zone forming, and you need to draw parallel lines so that you get to identify that zone from where price is reversing, right? And also drawing like this, you also increase your winning probability. For example, here your chances of buying the stock here, because the candle also was a good candle here, you see that wick, so continuous wicks are on that zone, so you know that zone is probably a reversal zone, and you buy the stock right at the point for a good swing trade, which probably is heading higher, right? So that's the second rule. Now again, same thing needs to be done here as well. Now if you see, I connected this point and that point there, so I connected that the top wicks, and I connected even this wick over here, right? So that's how you need to draw trend lines. So always consider wicks. Many people say you don't have to consider wicks. No, that's not right really. You need to consider wicks, but consider them as zones and not single lines. Okay. Now the next thing I wanted to show you is how do you adjust a trend line. Now let's assume this entire scenario over here. Now this is probably when the price moved up like this, you probably drew this trend line. Now remember, this is a very steep trend line. I'm going to come to that shortly, but steep trend lines do not really last long, and price will eventually tend to break them sooner or later. And then the price starts, coming down like that. And now when the previous high is crossed and when the price goes higher, then you need to draw this trend line over here, right? So that's the second trend line you draw. And then once the trend line breaks, you wait now for this price to be crossed again. So once this trend line breaks, I'm repeating again. So once the trend line breaks, you need to wait for this previous high to be crossed again. Now that point was crossed somewhere here, right? So then taking the previous swing low here, I'm connecting that line over there, right? And now that's the third trend line that I'm drawing, right? Now once you draw on this trend line, now the trend line price is broken here. Now you need to wait for the previous high, which is this, to be taken out, right? Now once this price high is taken out, which is that point, now you find the previous swing low there, which is this one, and then you draw this trend line over here, right? And once you draw this trend line, the next step is you need to wait for this price to break this trend line. And once the price breaks this trend line, now you wait for the previous high, which is this, to be crossed, which eventually was crossed here, right? Then you find the swing low, which is below, and then you connect that point, and then you draw a trend line again. Now that's how you adjust trend lines. Now it is very important to keep adjusting trend lines, because trend lines are not a rule, and trends sometimes can last much longer, and because of time correction and price corrections, trend lines do tend to change, right? So if someone says you cannot be correcting your trend lines, that's completely wrong. That's not how you do it, and this is how you objectively do it. So if you did not really understand this, just go back, probably rewind a bit, go through it again, and then join me again, in the next section. Now remember, all these trend lines, all these rules are applicable to even a downtrend line. Okay, so all the rules we've discussed is also applicable to downward trend lines. So the next point that I want to discuss is the number of touch points. Now this is a very, very, very important rule, right? Because the more number of touch points, the more significant that trend line is going to be. So for example, in this point, let's say, let's draw a trend line again. This was a swing low and this was a swing low here, right? So we're going to connect these two swing lows, and then you have this long trend line here. Now let's assume this price is not yet formed. Okay, let's go with the rules. Now this high was crossed, and this high, the stock went higher, then it came again and retraces this trend line. Now remember, this first touch point is already there, the second touch point is there, and you have the third touch point now. Now this price has again reversed now 3 times, so 1, 2, and 3. The moment you have 3 touch points in trend line, now that trend line now becomes a valid and a very significant trend line, or very important trend line. And next time the price comes there and you see such a bullish candle or green candle there, that's when you need to take the trade, because that time your chances of getting a winning trade is much higher, and if it probably breaks down there, then also you take a short trade and you make money there, right? Third touch point, this is when it becomes a valid, a significant trend line, and then again goes higher, again reverses here, again reverses here, again reverses here. Now, why the reason why the price reversed so many times from this trend line is because this is a very significant trend line. At this point, you can understand, or at this point, you can understand that this is a very important trend line. And then when price eventually breaks this trend line over here, that's when you short the market and you know that the trend is definitely now down, especially when the previous swing low is broken. You definitely go and take a trade there and you make money with this. So remember, this is very important rule, number of touch points. So a trend line with more than 2 or 3 touch points is significant. The next point is the trend lines on higher time frames. Now, if you're looking at a trend line, let's say this is a very short term period. If you're looking at a trend line, probably on a 15-minute time frame or a 30-minute time frame, and if there's a trend line, and if there's another trend line on the daily charts or the weekly charts, which trend line do you think will hold or will be respected more? It's obviously the daily or the weekly rather than a 15 minutes or a 30 minutes trend line, right? So in this case here, we had a shorter time frame. Probably this is just a few days, here. And it's also probably, if you go to the 15-minute charts, you'll see this much higher view on hourly charts. And this trend line, once it broke, you see the price reversed from the hourly trend line, right? Now, that's why I say short-term trend lines do not really last long, but whereas long-term trend lines on the bigger time frames do last longer, right? So if you see a trend line on 15-minute charts, next time do realize or do understand that the trend line will eventually break, but look out for trend lines on 30 minutes or 1 hour time frame or daily time frame that will eventually hold, and the probability of you getting a winning trade is higher on those trend lines on the higher time frames. So that's the next rule that I want to discuss. So another rule is trend lines with steep angles. Now, I showed you where I adjusted trend lines. I showed you why the trend line keeps breaking, right? Now, trend lines with steep angles, right? Doesn't matter which time frame it is. If a trend line has a steep angle like 42 degrees here, or like 30 degrees here, or 54 degrees here, or 73 degrees here, these trend lines will eventually break and they will not hold for a long time, right? But if you see trend lines with lesser angles, like this 15-degree angle here, this stock, Aarti Drugs, corrected for 5 years, came and tested this trend line after so many years and reversed and went higher again. Now, this needs to be engraved in your brain. For example, if you look at a trend line on a short term, if you're interested, if you look at a trend line which has a 70-degree angle, that trend line is not going to last longer. So when a trend line breaks, you need to probably have your own strategies and take a trade. But if a trend line which is around 10-15 degrees angle is respected and a reversal happens, that trend line will make you more money. Okay. And that's the last rule that I wanted to look at today. And I hope you understood what trend lines are and how to draw them. And I hope you understood which trend line is significant and which is not significant. Okay, so I'll leave you here. Don't forget to subscribe to my channel if you understood this and if you did really appreciate my analysis. Also, share this video with your friends and colleagues. I'll see you in another video. I'll leave you here. Take care, stay safe, and trade safe. Bye-bye.